Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content for Wednesday, September 14th, 7:22 a.m. as I'm starting the video. And as always, please run your player at 1.5x. We're trying to bounce a little bit in the futures. I'm just going to bypass all that stuff this morning for give us a few extra moments of chat time and time to look at the charts. It's not very often that I encourage you to carve something into your desktop, literally. One, as we know, is don't fight NIMO. When the NIMO and NAMO get to extremes, you are putting yourself in harm's way to continue to shoot against it. So that is something for your desktop. I got another one for you today, and that is event risk is real. Event risk is real. Now that's been on my desktop for a long time. Yesterday we had an event risk, right? CPI. But unfortunately, I, for one, did not give it the weight that it deserved. There's a reason I don't play earnings. It's because of event risk, right? You have no idea on an earnings announcement what the market may do to that particular stock. It can beat and sell off 10%. It can miss and go up 10%. It could do nothing. You just don't know. It's a roll of the dice. Now, yesterday, I never would have imagined that with a nominal negative surprise on CPI would have had that reaction. And so discounting that event risk was definitely a mistake. What are the things that we could have done? Simply, back off on risk. I got caught with a number of longs on that move. Hurt a lot yesterday. Now, did I get out of it and make a little bit back on the downside? Sure. But the point is, as you're sitting there, first you got to identify the event risk, right? FOMC meeting, CPI reading, earnings. I mean, those are the big ones, at least lately. So we knew there was event risk there with CPI. We talked about it. We wrote about it. But we didn't do anything, or at least I didn't. So I think just deconstructing that bad day is, heading into that, you ask yourself, what's the worst thing that can happen tomorrow? And how much am I willing to put at risk if a bad surprise happens? Now, you may have a couple of positions that you said, I don't really care what happens tomorrow. I'm bullish, I'm bearish, whatever the case may be. You leave that on. But if you've got short-term positions and it goes the wrong way, you're essentially dead, right? If you got calls for Friday and you still got them, they're a zero. I mean, it's pretty much that simple. Yeah, we may bounce a little bit here and they may go up in value just a little bit, but with 2-3 days till expiration, unless there's a moonshot, which there's not going to be, those are a zero. So my apologies for not calling that out and taking it more seriously. I hope you didn't get hurt too bad, especially if it was based on my guidance that was definitely a disappointment yesterday. So in the future, take those risks seriously, and then the second part of that is take action on your open positions and only put at risk what you feel comfortable in losing. So let's dive into the chart. Big moonshot on the dollar. We were hoping that was going to go, continue to fall. It almost got to the trend line, didn't quite get there, but close enough. And then the rising rates, etc., really popped the dollar. TLT was managed to close green, but it took a deep dive in the morning. I think 108 is still the pivot point, and while it's below it, it's going to remain vulnerable to going lower. Now you get a recapture depending on your time frame. As we always say, recapture a level from below excuse me, is bullish. So if you want to take a tactical long there on a recapture 108 and look for a bounce, that seems to be the ticket there. VIX, of course, took a big jump back up to the top of the prior range. I think now the levels to focus on are 29 and 30. We've got a resistance band there. If there was to be another sell-off and this thing breaches 30, then all bets are off. The path of least resistance is definitely going to be higher and could push up towards 36. And remember, next week we've got the rate announcement from Powell. I mean, 75 bips is a lock, in my opinion. At least that. They may go 1%. Who knows? But with that inflation print, there's no way they can back off now. They gotta continue to push, and it'll be a matter of degrees how much. I was just listening to a pretty smart guy talking about they really need to get into the 1.25% range. I don't think they're going to do that, but in terms of actually starting to grind demand down to bring inflation down, they're going to have to remain very, very aggressive. Bitcoin, of course, was down, lost this level here, 21,500. So now it's in the middle of the range. I don't think there's a big trade to make there. I think you got to wait till 21,500 or 19,000 again before you've got a very objective trade there. Oil came right up and tagged the declining 20 again and closed right near this 88 pivot. I think that's the pivot you want to watch if you're interested in trading oil. I think above that you can be long, below, still leaves the door open for a move back down. But you can see those twin touches there at the 20. That's a nice example of how a moving average can act as resistance on the way up. Obviously, price knew exactly where that level was at. NYMO dropped down from the 20 area down to the minus 20 area. Here in the middle, not really all that useful. We'll have to wait till it comes back down, to minus 60, minus 100, get overextended to the downside before we can really start leaning into longs. NAMO, same thing, middle of the range, 17, not particularly useful. As we get into SPY, you'll recall that just, it's been about a week. We have been testing this 390 area. Really, really important. We got to hold that below 390. Now you're on the wrong side of the chart. Notice all this support here. Well, it was resistance back here. You know, resistance, resistance, resistance. Came back for support. Support here again. So now 390 becomes really the magnifying glass on SPY for a big pivot zone. And anything below 390 that sticks, then that's going to open up a move at least down to what I would say like 375, where you had all this support here. Fill these little gaps, come down, fill that, and then there'll be a bigger decision at 375. Do we go down and touch the June lows down here at 365, fill this gap, and then, you know, do we break the June lows? That would be another big decision point, because if you lose the June low, that'll bring in the next wave of selling. Here on the 60-minute chart, you see the big gap down, and then you've got a series of sell signals. Why? Because you lost a level from above. So when 401 broke, that was a sell signal, came down to 398, hesitated for several hours, then that broke, sell signal, and then another sell signal at more or less 395 when this one broke. So today, you've got this 390 as key support, and then if there's a bounce and you're tactically trading on your short time frames, you know, recovery of these levels would be your buy signals for a bounce. I wanted to show you, and I think I have it marked on another chart, the phenomenon of an island top reversal. Notice you've got a cluster of price bars here, and you've got an opening gap from the other day here, right? So there's a gap on the left, and now there's a big gap on the right. That leaves this island of prices here. And so that's called an island top reversal. And if you want to delve into it, you could just Google island top reversal candlesticks, something like that, and you'll get some nice diagrams and explanation of it and its significance. You don't see them that often, but they are significant when you do see them. So all over the charts, you will see that phenomenon created yesterday. So if you're a student of candlesticks, I highly recommend you just take a look at that explanation and put that in your toolbox for down the road. Qs. We've got a level here, this prior low at 290. See the reach down, got to 290. That would be a support level. But I think the big level here is at 295. Why? Resistance, resistance, resistance. That should have held 295, right? Because that should be support now. But you can see, like here last time, it spent one day there and popped right back above. This could easily have been a momentum fueled overshoot, just so much selling that it went right through that support level at 295. I think that would be a good level if you're tactically trading for a bounce. If we recapture that this morning, then I think you can be long against that level in your trading. And actually, now that I look at it, I have this level at 296 here. I think if you bring that bar down to this high volume over price bar here, you'll get that 295 number that we just talked about. I think that would be better. I'm not going to move it right now, but if you notice where the large volume over price bar is, the top of that is 295. So I think that is your pivot level for today. And so, if there's a recapture of that, I think there may be a good quick tactical trade there. IWM, not quite as bad as the others. I mean, it had bounced higher, and now we've got this big level here to keep our eyes on at 178, this prior low. And if we can recapture 193, I think that'll be a good pivot location. Did I say? Yeah, 183. I think I said 93. 183. And you can see that here, entering into this high volume over price resistance zone. You'd have resistance at 183, 184, and then this downtrend line here would probably act as resistance as well. Here's another example of that island top right here. You got a gap on both sides of the island, which in fact creates it. So that's that. Meta broke that key level that we have been talking about at 155. It's got to, simply put, it's got to recapture that. Remember, we had a trading zone from 155. Let's just call it, I think it was actually, 172. So what is that, what is that? 155, $17. So as it stands now, the measured move would be $17 lower, and that would bring you down into the 140 range, maybe even a little bit lower. So there is some technical support at 150, and that is the believe it or not, that was the COVID low at 150. So that level goes way, way back, a year and a half. So that's going to be an important level if this thing does fail. But watch Meta very, very carefully around this 155 level. Very important for the bulls to recapture that level and then open the door for a move back up into the trading range to fill this gap and possibly even tag the top. Now, talking about tagging the top, I had this bar being a little bit shy right here, but maybe that was, close enough. And then you got this reversal candle right after the touch. That's never a good sign. So anyways, top of the box, bottom of the box, and now we've broken it. So 155 is really going to be the key. On Apple, the key is 153. That was the low of the other last or a week or so ago. Right here, that's got to hold, or we come down to 150 and a half down here. Really got to hold this 154.50 if the bulls are gonna survive this scare. Tesla's been holding up. It was down 4%, but a lot of other stocks were down 7-8%. So what I have here is like 291, this little cluster here, support If you lose that, then you're into 287.50 and then right on down. If it can hold the line and break above 295, then you've got a chance to pop up and fill this gap. Rough day for Microsoft, 5.5%. Right up here, big gap down. And actually, again, right here at 259, what did you have? You had a re-entry into a well-defined prior trading area, and your target immediately becomes the bottom of the box. Now, you don't always get a fill on the same day, but yesterday you did. So let's say you were sitting long like I was yesterday right here, and you got the gap down. So I mean, this is where the psychology of trading really comes into play. You were sitting long, hoping for the best, hoping for a moonshot, and you got a reversal. And right at that moment of the open, you're probably feeling pretty low. You know you got hung. But if you can pull yourself out of that mini death spiral, that mentality, and realize that, hey, wait a minute, I'm back into the prior trading range, that old gap between 259 and 252. If you're a tactical trader and you can switch gears from long and strong to, hey, wait a minute, I need to get some puts because I re-entered the trading range, then you actually made more doing that than you lost with this big gap down, because that gap down was, let's just call it $6. And then you had a $7 move. So when you get in, when you're in tactical trading mode, try to quickly get back into where's the next opportunity, right? If you can flip the script in a heartbeat, there would have been a lot of downside opportunities yesterday to take advantage of if you can get out of that sulking mode and flip it into, hey, downside surprise, and take a quick position or two, then you've got a chance to turn what could potentially be a horrible day into a day that isn't quite as bad. Amazon gap down, came down and lost this 129.50 area. That to me was your triple confirmed sell signal on that break, and then you got an extra couple $3 out of that. Today I think you got to recover 127.50 area to go long. Otherwise you've got to focus on 125 at this low, and then the prior low at the top of this gap at 124. And remember, this is just the leftover portion of that big gap that went up to 132, that went all the way up here. And so I've just, that's the remaining portion of that gap that never got filled when the upcycle started. Here was another example that very much mirrored the Microsoft example. You had the wall here at 111, and then it gapped down, but then it re-entered this this gap here. And in prior trading, the full extent of the gap was not filled. So there was still technical work to do on the downside. And yesterday was the day that filled. And so just like the Microsoft example, hey, we just re-entered the gap, that would have been a signal to get short. I mean, you had to act fast, but the trade was there to be had, and then you got tremendous follow-through to the downside. So I think it's got to recover 105 before you can think about getting long on Google. I apologize for this Netflix chart. For some reason, stock charts is acting stupid on this particular chart. Wouldn't let me make the changes. Anyways, let's look at it here. We had the undercut of 220 where it reached down to 215. Right now, price needs to recover 220, or else it's going to come down to 215 to retest this prior low. And this setup here was just like the Facebook example, where you had a big reach up. What was that? That was day before yesterday. That would have been Monday. And I had it a little shy of that gap fill, but they stepped in a little early and then slammed it back down. That's a a bearish move. Now it did bounce a little bit after that, but then yesterday, obviously dropped way down. I think the critical level today again is 220. Semiconductors, bad day. Here's that island top again. Got a gap here and a gap here, creating that island. Drop down, lost this 211 level, and then right back down to the prior lows at 204. That's your level. Above 204, you can look for a bounce. Any break of 204, it's going to be heading lower down into the the 200 range, I would imagine. Quickly through ARC-F, pop above the box, back down in the box. You know what that means. You can stay short against 118.50. ARC-G, same thing. Pop above, back down into the soup. Really got to recover 38, or this thing's going to come back down to this prior low at 34. ARC-K went right up to resistance. See, fail, 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 and fail again at 46. And so now it's coming back down in no man's land. You got to watch this 41 and this prior low at 40 like a hawk if you are into ARC flagship fund. And then ARC-W. We crossed the midpoint here at 52.50. Made a move up, but then it failed. So we're right back down to the midpoint of the box. I think if it moves lower, we're going to come down and test this area at 49 as the prior low. But then, if the bearishness persists, then you've got these prior lows at the bottom of the box that will probably be tested down at 46. So looking ahead, we've got Jay Powell on the 21st. I think that's a week from today, and we've got the big OPEX on this Friday. I believe that's a triple OPEX. Futures, options, equities, all expiring on Friday. So that'll be a big one. So just remember that event risk. If you're gonna, if you ended up paying a chunk of tuition yesterday on your trading education, towards your trading education degree, make sure you learn the lesson. And I think, I know it's the long game in trading is not necessarily how much you make. It's how many bad losses can you avoid, right? Because you can work a long time and just, get out over your skis in one direction or another. And then you have, one bad day can wipe out, weeks worth of work. So, and try to do better than me, right? I knew better, and I having a 5% sell-off really did not enter my consciousness until it happened. And so I think having that open mind going into event risk, if you take that defensive track, that defensive mindset, like yesterday was not a day to try to make money, heading into it, because you had no edge, right? We had no edge. We talked about that. Could it be a 10th high? Could be a 10th low. We knew it was going to be high. We didn't think inflation was going to disappear. My poor assumption was that was already in the market, right? That everybody knew it was not going to disappear. But like I said, a 10th high, a 10th ahead of expectations, doing that was not on my radar. And so, anyways, dust off, move on. Let's get back to business, level by level, and see where today takes us. So I hope that helped. If you're new to the channel, hit the subscribe button, the alarm bell. You know what to do. Head over to the show notes and find the link to the blog site where you can drop in your email address, and that way you'll get all the content right to your email box. You won't have to hunt for it. And while I got you, we're running good on time. Go through the trading psychology tab on the website and thumb through those articles. There's a lot of wisdom there that can help you, with confidence building, how to think about things psychologically, because in my experience, almost anybody can learn technicals, right? You get the NIMO up there and it goes minus 100. You don't want to be short. That is, trading 101. Support and resistance. Everybody can learn that. Drawing trend lines, all that kind of stuff. That can be learned by anybody. And I hope you're developing your skill set in that regard. The trick or the challenge is your trading psychology and being on the right side of that, and eliminating those negative thoughts, eliminating that emotionality. If you're a young trader, experience-wise, you want to be very, very mechanical in your trading, level to level. Did we recapture a level from below? Did we lose a level from above? If you can be mechanical and not get all wrapped up in FinTwit and, all the other distractions that may be out there, you'll have a much better chance of putting on more and better objective trades versus getting off center and out of kilter psychologically. That can lead to devastating type losses. And so anyways, I hope that helped. Let's wrap it up there. Hope you have a good day of trading, and talk to you next time.